Hey guys, it's Max Convexity here. I'm sitting next to my little dog Jax. I'm getting ready to record episode 5 of Late Night with Max and Jax, or Jax and Max. Heck, I forget how I did it in the thumbnail. I say it different every time. Sometimes I call it After Dark. I need to work on my branding where I'm consistent. I'm not a good example of branding right now, of effective branding, I should say. All right, I'm just trying to BS so I don't have to talk about the uncomfortable stuff. And the uncomfortable stuff is the Defiance distribution that was just announced a couple of hours ago. I have a new video coming out on an ETF, a tail risk ETF called CYA, and I'm about halfway through writing the script, and I was going to finish it tonight and try to record it before I did this show. But then I saw about 6 o'clock that they announced the earnings or the distribution. So I had to watch Retire on Dividends video. Then I had to catch up with everything that was happening in Discord. Then I had to respond to a bunch of answers. And then after that, or a bunch of questions. Then after that, I couldn't hardly think about this ETF I was doing because I was so distracted. So I figured I'll just go ahead and record this show a little bit early, and I can say what I have on my mind and get it off my mind, and then maybe I can finish that other video later tonight or tomorrow. All right, so I guess the news was this. For anyone who hasn't seen it yet, here's the distributions that they announced. Defiance ETFs announced monthly distributions on QQQY. It came out to 60%. JEPY was 42%. And IWMY was 72% about. So, all right, and here it is in cents per share. 63 cents oh, that was last month. My gosh, what the heck? What the heck am I doing? What the heck am I doing with my life? Where is this month's article? I know it's out. Well, this is not a great start to this show. This is better than my Christmas Eve show. My Christmas Eve show was so bad. Episode 3, I think it was. It was so bad I didn't even post it. I was angry. It's all the same thing. This is a continuing drama from the same situation. So what happened is when I started figuring out these earnings, I was looking at my metrics, and everyone knows my favorite metric is this daily capture. You know, this thing's capturing nearly 50 cents a day, and it's a good way to compare the funds to each other. This JEPY is only capturing 16 basis points a day, and QQQY is capturing 18 basis points a day. And then I have it in per share and everything. So it made sense to me, and it still does, that if you catch this much income, you ought to be able to pay a really good dividend, like probably around 100%, even if you just pay 90% of it out and stuff. So I've answered questions all month. I don't know what the dividend will be, but it'll be somewhere in that neighborhood. Well, heck, it wasn't even close to that neighborhood. Here's what I missed. I feel terrible about this, but what I missed is, yes, that is true. They earn that much average, but the problem is they started here with 375,000 shares, and they ended with 2.9 million. So what is that, an 8x? Something like 8x as many shares. And so I guess it just diluted the share price. So if you look at this, and I can't believe I didn't catch that. Retire on Dividends tried to tell me on Christmas, or no, the day after Christmas. He told me just have fun with it and don't worry about it. He saw that I was getting myself in trouble, I think. So, but he said, hey, just, don't take it too serious. Everything will be all right. But, you got to factor in the share count. So then I was in denial. I'm kind of like the guy whose girl is cheating on him, and all his buddies try to tell him, and he just doesn't see it. That's how I've been over IWMY. I mean, no matter how many times Retire tried to tell me, I just, like I say, I'm like the guy whose girl was cheating on him. So anyway, So what I've been doing all day today is trying to figure out how to figure out if my girl's cheating in advance next month instead of all this drama. You know, I feel bad that I feel bad. I just feel terrible about this. I think you guys know that. Okay, I'll quit apologizing. So next month, how am I going to figure out if my girl's cheating on me? Well, I need to do some kind of metric that, even though these metrics are true metrics, I mean, that would, the 119 probably isn't. I shouldn't have never put that, but these are true metrics. Daily capture, average daily capture, they're true metrics, but I need to factor in the share count. So if you look at this, you know, JEPY, that number came out pretty accurate, 39%. I think that's about what they paid. I mean, that is in the ballpark. You know, and I also, this number right here, 60 cents a share, what was it, 53 cents or something? I've already forgot. But on a percentage basis, JEPY, I had 39, they had 42, and on a per share basis, oh, that's still from last month. Never mind. Gosh darn it. Where is the fucking, I'm sorry, where is the freaking, I meant to say, freaking announcement? Let's go to Discord real quick and get the actual damn announcement. Oh, this show is going sideways. Like I say, it's not near as bad as the Christmas Eve show. Someday I might release the Christmas Eve show as a blooper. And it's too soon to look back on it and laugh for me anyway. I was not a happy camper Christmas Eve. How could I find this darn thing? Let's go to, I know Corey posted it in Discord, and it was on Jackson. Even Jax is bored with this show. He's yawning. Where did she post it? Maybe right here. She even pinned it to something. Maybe it's under anything and everything. Gosh darn it. What is... I'm not having a very good... All right, well, here's the actual numbers. Okay, it's... all right, so earnings per share wise, they had JEPY at 50 cents. And like I used 3 different metrics to try to figure out which one's going to work, but just taking up the income, and I didn't discover this, Retires already had a video on it, but adding up the income and dividing by shares seems to be the closest metric. Extrinsic, you know, for now that doesn't seem to be the best method. You know, and the cents per share is the same thing as income. This is based on the same number. So there's 53 cents and 97 for JEPY seems to be the closest. Yeah, it was off by 3 cents here. And then on a percentage basis, it was a little bit off too, but not very much. Well, on a percentage basis, this was pretty much was right on. But on an earnings per share basis, that was pretty close. I don't know. In any event, we know that the way I was doing it, we know I'm not going to project the annual yield out anymore, especially on a fund where the share count is increasing. I guess the reason it didn't hurt on JEPY too bad is because they went from 50 million shares or 50,000. What is that? 55 million? I don't know. I can't tell. Whatever it is, they went from 5 something to 5.6 something. So that's a 10% increase. So you could consider a 10% dilution. So, you know, maybe if you have that kind of metric, you know, maybe less than 20% dilution or something, then these kind of numbers up here are pretty accurate. But then maybe when you have an 8x dilution, these kind of numbers up here are not at all accurate, or that's obviously what it is. This running estimate got it pretty close. The earnings per share, 96 cents. That's pretty close. It was $1. JEPY, I had 53 on this metric. It was 50. And QQQY, I should say, I had 66 on this method, and that was, and I think it was, what was it? It was 62. Okay. So that's the ticket. So the good news is I've cracked the cheat code, or I guess retire on dividends is crack the cheat code. So, next month will be a better month. Just like I say, I can't say I'm not disappointed. A lot of it is disappointed in myself. Like I say, I'm like the guy whose girl's cheating on him. I should have checked into it a little bit further before I freaking told everyone I was so sure that she wasn't cheating on me. It's bad. I feel bad about it. All right, so let's on to bigger and better things. Let's talk about some other stuff. Let's look at some comments. So this is kind of the same thing. We'll talk about this a little bit longer. KJK Good commented, Max, I'm confused. IWM paid $1. QY 62 cents seems quite divergent from your tracking. The percent yields were decent, but it seems the synthetic long works better than 0-day puts. What is your take? And I think what he's saying is he's thinking when he says the synthetic longs, he means the yield max funds, because they use synthetic long, same strategy basically, but different. They use different options to achieve similar strategy. And maybe he's thinking, Coney, because Coney actually yielded, above 100%. And I know what he's saying. It's not a bad point. I don't think it's not the synthetic long versus the short put that killed us. A lot of people want to blame the short put, not just in this case, but for everything. People just hear the word naked put, and they want to blame it for everything. The thing is, when you have a synthetic long strategy, if the market drops 10%, you still lose 10%, just like with the naked put. It's the same thing. You lose 10% if the market goes down in either case, because the price of your synthetic will drop by 10%, just like the price of your put will go up by 10%, but you're short. So it's the same thing. So I'm not going to blame it on the synthetic long. This is just a case of I was made a bad call and should have factored in the share dilution. I'm gonna keep an eye out for that in the future. That's never going to happen to me again. Probably something else will happen next time, but not this one. All right. And this guy was just telling me, JC was the first one to tell me. I was doing I was writing the script for the other video. Then I saw this comment come up, and that's when all hell broke loose. This person was asking about drawing the profit boxes. I'm going to talk about that in a little bit, and we're going to, before the video ends, we'll go draw the profit boxes, and I'll show them how I do it and which tool it is. Now, here's another comment. So Dr. T, he comments all the time. He says, I like the daily percent capture because Defiance's goal in the prospectus says 25% daily income. Okay, and then he gives me a compliment, but I'm not trying to butter myself up. But so, yeah, I do too. So the percent capture here at nearly 0.5% a day tells us that their strategy's going great. There's nothing broken with the put selling strategy. The problem is the share dilution. But if you're just looking at the strategy and if the strategy's working, or maybe you want to see if the fund managers are doing a good job, yeah, I think that is a good metric to see, how the fund managers are doing. But I'm gonna quit projecting this annual yield, or I'm gonna do it, but I'm gonna do it a different way. You cannot just multiply that out. All I did was multiply by 250, and I guess that would be true maybe if the shares were the same, if the shares didn't go up or down. So that's just a dangerous metric to put. Live and learn. But anyway, I'm not giving up on the capture. The capture percentage tells you how well the strategy itself is going. As far as what the ETF pays, it's a different story. I get this question a lot. Let's talk about this, and then we'll get on to the profit boxes, and I'll let you guys out of here early. I know I tend to talk people's ear off, and I'm not trying to do that. All right, so Steve said, and this person comments lots of times. It's a good commenter. He says, Max, what are you going to do about the correction? Are you going to write it out or take profits? So here's what I put. I just want to read it back. I said, every time in my lifetime the market had a correction, it was a great buying opportunity. I'm 57. I saw the market drop 25% in one day in college in 1987. That was a great buying opportunity. It was back by the next year, we were going back to all-time highs. I saw the market drop 10% in a day and 40% in 3 weeks during COVID. And that was a great buying opportunity. You know, look where it is now. Think if you would have bought it any time during COVID. Even if you had bought it the day before it crashed, you're still doing great. You know, as far as capital appreciation goes, the triple Qs, the SPY, any type of growth fund has been doing great since then. So he said, then I said, I see corrections as a buying opportunity. You can't know ahead of time about a black swan. I mean, that's the whole deal of a black swan, you know, that they're unpredictable. By the time one happens, it's too late to sell, in my opinion, not financial advice, in my opinion, though. And if you did sell, this is the really tricky part. The COVID thing wasn't too hard to predict. I mean, you know, there was people that knew it. There was congressmen that dumped their stock beforehand and stuff. But, okay, so yeah, you know, maybe you would have caught wind of that maybe a week early and got out before the floor fell out of the bottom. That's possible. I can see that happening. That maybe wasn't the true black swan. But how do you know when to get back in? You know, you remember when that fund manager or the hedge fund manager, he's one of my favorite. I would love to meet him someday. His name's Bill Ackman, and he's an awesome dude. He predicted it, and he went long VIX on his hedge fund, and his hedge fund made $2 billion or something. They cleaned up in March. Well, anyway, he came on CNBC. And they were interviewing him, and he cussed on the air, which he'd never really heard before, but he said it's turning into a shit show. I think he said we have 50% more down to go. We aren't even halfway there or something. And this was when we were already down 40% or something. He made some kind of dire prediction. Well, that was the exact low. The next day it started rallying, if I remember correctly. So, you know, the thing is, even he didn't know exactly when to get back in. He did make a good call on getting the VIX. I don't know how he shorted it, probably with swaps and probably options and swaps, and probably shorted some futures too. But the thing is, if you do get out of the market, that's great. Before a drop happens, great, good for you. When do you get back in? I don't know how to do that. I mean, I had friends that were, everyone I knew, in fact, even when after COVID or even after March of 2020, when the market started rallying again, remember everyone said, oh no, it's going to double dip. You remember when oil went to below zero and everyone thought, oh no, it's a precursor. We're getting ready to take another leg down and this one's going to go further than the first leg. Well, no, it didn't happen. I mean, there's people that I knew. I had a friend that got out of his 401k or switched it to bonds or something, but he never did get back in. By the time he got back in, the market was already higher than you know where he got out of it at. That it's not just being able to get out of it; it's where you get back in it as well. So my theory is, yeah, you ride it out. You're either invested in the market or you aren't invested in the market. If you're invested in the market, black swans are going to hit every few years. If you're properly allocated, you know, you should be all right. I mean, it's still going to hurt, but if you aren't overloaded on, you know, on whatever, I mean, you don't want to be overloaded on everything. Proper allocation, you know, you have proper allocation, proper diversification. You have a long-term perspective. That's about as good as you can do. You can also buy some of this fund, CYA, that I'm going to talk about tomorrow. There are ways to try to hedge out some of the black swan risk without having to predict the exact date. You could run what's called a put overlay strategy, which is what CYA does for you, where you just roll out of the money puts, and you know, and when the black swan hits, you know, you can recoup some of your money. So, you know, it's not like you're defenseless, but no. I don't believe in the in and out thing. Oh no, it's going to crash, get out. Oh no, it's going back up, get in. I just think that's it's been my experience that doesn't work. So anyway, That was a little bit of a rant about that. But hey, I appreciate the question, Steve. I always enjoy Steve's questions. Um, let's see what this person said. Oh, yeah, that's the same person that said they like the daily percentage capture, and I do too. We already covered that. All right. Yeah, this KJK. I mean, it has a good point. I'm confused too. I think I figured it out, but I just don't think it's fair that people can pile into your fund at the end of the month and dilute your share prices. I mean, what I wish they would do is have a fund where maybe you could only buy it once a month. You could only buy it on the X date, or or something, so we knew how many people were in. You had to either be in or out. You can't just see it's doing great and get in. Maybe what happened, this is a theory, maybe what happened is people saw that it was doing so good. Maybe people were watching my update. And they were like, holy cow. And so maybe they sold some QQQY or sold some JEPY and they reallocated into this. And in the process, they diluted the heck out of the shares. I don't know. It's as good of a theory as I've heard so far, or as I've come up with so far. This person right here asked me to increase my volume, and yes, I'm aware that's a problem, and I'm going to try to speak up. And whenever I do a big video like I'm doing tomorrow on the CYA, and I put myself on camera and I have slides and stuff, I will cut the video together and I'll make some post-production edits. And I'll put in some bloopers and I'll put in a little music at the end of the thing and try to make it more like a podcast. Yeah, and when I do that, I go into my software and I hit the thing that there's something in there that makes it where your S's don't sound as sharp. If you say a lot of S's, it's called a de-esser, but there's effects, audio effects in there that will take background noise out, make take the S, that sound out. And I can also, with the same tool, I can also boost it 10 decibels. And that's what I usually do. And that way I don't have to talk so loud. But and lots of times I do those videos outside and it also cuts the wind noise. But on these update, on these daily update videos, I'll just try to remember to speak loud and pronounce everything well. I've been accused my whole life of speaking too fast. And they're right. I do speak fast. I cannot believe I haven't had a comment yet telling me to slow down. But I need to slow down, though, for sure. I'm aware of that. I try to be somewhat self-aware. This is a good point, too. I like just reading some comments. Elliot, I don't think this person's ever sent me a message before that I remember, but this is a great point. Just for all those who may be interested, IWMY and QQQY record date is tomorrow. You will likely be getting in at the highest price per share, but you will get this month's dividend. If you wait until after the 28th, the ex-dividend date, you will be able to buy in for far less, but you don't receive the dividend until next month. And I think most people know that, but that's just a good reminder. I appreciate that comment. All right, like I say, I'm going to quit trying to talk your ear off you. If you want to, we can look at these. Let's look at the strategies for tomorrow. Oh, I can't show you that. That's my presentation for tomorrow. But I haven't even done these yet. Let's just do these profit boxes together, and I can show you how to do them. If you aren't that interested in it, now would be a good time to turn off because I haven't done any of the math yet. I'm gonna go from scratch. But for whatever reason, some people like to do this, and I'm gonna try to do it as fast as possible too, because if I do it by myself and not on the air with you guys, I find other stuff to do. I'll start patting the dog. I'll pick up my guitar and start playing my guitar. I'll walk in. I'll go get a Coke out of the fridge, or not really a Coke. I drink seltzers, but I call them a Coke. But I'll go get a seltzer out of the fridge. So anyway, I need to just stay focused. So I'm going to give myself 5 minutes to do this. Let's just bust this out. All right. So the first thing we're going to do is we have to go to the Defiance website and we have to hit intraday trades, and we have to get the old intraday trades out. So, all right. And then what I do is I copy and this, just to recap, it shows that they bought 164 options back for nothing, or that little line there, I think, means that they let them expire. And this means they sold. Is this right? This seems like it's not right either. Tell me I'm not. That says 12/26, which is today. I don't think they've posted the trades for tomorrow yet. Maybe they were too busy posting the dividend data. Okay, well, let's look at the other funds. Let's see what the heck's going on here. Let's see if they have the trades posted for JEPY yet. All right. There's two places you can look. Sometimes they consolidate the trade here. Yeah, they have the 27th here for 10/27. Let me check this intraday trade real quick. Okay, yes, this one's been updated, but QQQY hasn't been updated. I'm going to go back to QQQY one more time just to make sure. I'm going to refresh the page. There's no way they haven't posted this one yet. Well, it's here. They have the 27th here, but on the intraday trades, I keep re-downloading because I think it'll change. Okay, there it is. It did change. It just changed now. You guys saw that. You're my witness. All right, so let's get this done. Let's get this freaking done. I appreciate everyone's comments, and it gives me something to talk about, and I'm really enjoying doing this show. So, okay, we're going to go to QQQY. Here's my method. I cut and paste it, but then I have to make a little formula. So that they got 80 contracts. The top line says they sold 80 contracts at 53.57. The bottom line says they sold 84 contracts. Disregard that dollar sign at 53.40. 53.40. All right, so then we have to do the math on these. Multiply that, and then do the same thing to this one. Then add these two, and then we have to add these two, and then we have to divide this one by this one. Does that make sense? Oh, that's terrible. That does not make sense. One thing that needs to be just numbers. Okay, well, that's actually right. Okay, so here's the answer. 164 contracts at 53.48. So we're going to bust it out. Let's see, 150. What did I just say? I said 164 to 164. All right, so, and then we got to get the strike price, or we have to get the strike price, I should say. 16,910. Boy, we're getting close to 17,000. When do you guys think we'll hit it? Leave it in the comments. All right, so then all I have to do is I have to change this closing price to, I have to destroy this reference. I wish someone could tell me how to get this to do this automatically. 878.46. I need it to live update during the day for my updates because it changes the profit loss. Then after the market closes, I just want that number to stay there because I use this number to calculate the intrinsic and the extrinsic. All right, so anyway, then I just have to copy this, copy all this stuff down. All right, and then I have to copy this stuff down. I guess all this stuff. Here we go. Okay, so now we're going to go do the profit box. But let's just recap this. They sold 164 options at the 16,910 strike price for 53.48. The break even is 53.48 less the strike price, 16,910. So it's that number. So I need to get those two numbers and go over to TradingView and put them on the chart. And so I just remember the last three numbers, 910 and 856. Okay. 910 and 856. Okay, so I get the tool out over here that is the drawing tool. And I get the one that's the parallel channel. All right, so then I have to go find 910. There's probably an automated way to do this too, to make a spreadsheet and then have it draw the chart automatically, or draw the profit box automatically. All right, and that needs to be green. All right, and then 856 is the break even, so I need to find that. Oh, this profit box is getting pretty small. Look at that. That's not paying a whole heck of a lot of dividends. Just visually, and it's just because as the market goes up, volatility goes down typically. This market has just been on a freaking tear lately. Okay, so anyway, there's the profit box for tomorrow. So that was pretty fast. Thanks for doing that with me. I appreciate your patience. Let's try to get this next one done real quick, and then I'll let you guys go. I might start doing this as a live stream some night if you guys want to participate. I've been releasing these as a premiere, and then I stay around afterwards to answer questions. The only people that are up, though, by the time I get these done are in Asia or in California. But I love talking to my West Coast people. All right, so let's get the show on the road. JEPY. I think I already got this, but I'm going to go get it again just to make sure it's the right version. All right. So, okay, we have 175 contracts at 1070 and 45 at 1052. Back in the old days, I would just call that 1060, and you know, 210 contracts at 1060, or 220, whatever 175 plus 45 equals, and I'd be good to go. But then I started to do it more exactly because I got more fans and people started checking my math and stuff, which is good. I appreciate that. So let's do this exactly. Oh, here's a cool trick I learned. If I've already done the math once, well, I still have to do this. Okay, but if I've already done the math once, I just put it right here. It was 175 at 1070, 175. Oh, shoot. 175 at 1070. Okay, and then the other number was 45 at, gosh darn it, 45 at 1052. Okay, 45 at 1052. So then I just fill that out right here. 45. Oh shoot. Okay, then yeah, it was 220, and this number is 1066. See, I said 1060, but all right, 1060. So 220 at 1066. Then, like I always remind you, I have to go over here and change the last price, which is right here. Is that where it is? No, actually the last price is right here. Okay, and I've already done it. It's already a real number. So that's fine. Oh, wait, no, I haven't. Now I need to get the last. I haven't done it yet. I need to get today's close. Gosh, I could see it up here. It's 4774.75. So 4.75. All right. So now all I got to do is drag everything down. Oh, I have to get the strike price too. Strike price was 47.80. They're getting close to 5,000. Not really. They're getting close to 4,800. But what do you guys think the market's going to go to next year? What do you think the S&P will end at? December 31st of next year. Do I get any macro analyst out there? I have no idea. I was just wondering if anyone had an opinion. All right, so then I have to figure out the break even, which is that number, 47.6934. Then I could drag all of these down. I can drag all of these down, and then I can drag these down. These spreadsheets are a mess. Tomorrow there'll be brand new ones. These are my columns. Gosh darn it. All right, so here's the deal. We sold 220 puts at the 47.80 level for 10 bucks, 10.66, but that's going to make a break even of 47.69.34. And the intrinsic and extrinsic, I don't think those are that big of a deal, but those are the numbers they're at. That's what they are. All right, so I just need to remember 780 and 769. Go over here, open up the SPX, 780 and 769. Get out the tool. Oh gosh, I didn't mean to do that. Oh my gosh. All right, 780 and 769. Golly, this is slim pickings up here. Look at this. I hate when it does this. I had the damn thing selected. There's the intrinsic or the in the money amount, so it's green. And then I need to find 769, which is right there. Turn that yellow for the time premium or the juice or whatever you want to call it. That's the theta decay portion of the option. That's the good part. That's why I made it gold. That's the golden part. All right, they're both good. It's the same thing. They're not the same thing, but they're both good. All right, so there we have that profit box. Let's get this other one done. You guys are helping me keep focused, and I appreciate it. We've already done that one. All right. Okay, IWMY is the last one to do. Okay. Boy, that one, I wish I never would have met it lately. It just had me so upset that I, you know, this one, I'm going to quit talking about it. I got to get over it. Just like a guy has to get over the girls cheating on him. There's other fish in the sea. All right, so I actually need to go to IWMY and get there. There should be a lot better way to automate this. So anyone has any ideas, let me know. I guess I could use XML functions and I could web scrape. I don't know how to, I know how to web scrape this, but this isn't always right. I don't know how to web scrape this, because this is the official one, this little CSV file. There's probably a way to do it, though. That'd be so awesome to have this automated. Give me more time to do other stuff, to hang out with Jackson, and to hang out with my family, and to make videos. I haven't made any videos lately because this IWMY stuff is all consuming right towards the end of the month, trying to get these spreadsheets figured out, and oh well. All right, so IWMY. So let's do this. I just posted there so I could see it. 171 and 10. So then I go find a box where I've already done it. Here's a good example. So, all right. So we got 100 and that's not the right kind of box. That's a ratio. Let's figure out a ratio. Whatever. It's fine. 171. And they got 10 bucks for those. And then we did over here 166. 166 at 1360. You could easily do, what is that, 220 or something? What's the half of that? Oh no, I don't know, but anyway, I was trying to figure out the halfway between those two numbers real quick. I used to be good at doing math in my head. All right, that's right. Okay, we just have to add these two numbers. we have to add these two numbers. Perfect. Then we have to divide. This out to figure out the per share average. We'll do this one divided by this one. All right, so we have 337 contracts at $11.77. Well, this share is really getting big. I remember when they used to just sell 50 or 100 contracts. They're selling 337 contracts now. All right, 337, 1177. So it's all those people piling in. All right, and the strike price was 2070. So they're getting close to 2100. All right, so the first thing I have to do, like I always say, is go change that from a, it can't reference this other cell or URL to mess it up. I just have to switch it to the number 2059.19. Boom. All right, so then I could just grab all this other stuff and drag it. And then I can grab I guess I also need to be getting this stuff too. Oh shoot, I haven't updated the fund size yet. Oh my gosh, that's another cluster. I should definitely be able to do all this. Okay, if I don't update the fund size before I try to drag down the things, gosh. So let's see. We have to check out IWMY. This is why I get distracted. I like to do stuff fast, and I know that's an issue, but sometimes I'll just get bored when I'm doing this, and I'll start patting Jax. You know, I guess Jax likes it. All right, so 2950 and 61.4 million. 2950. Did I do that right? Yeah, that's right, I think. And what was this? It was 61.4. That's in the wrong darn freaking box. Okay, I remember this was 61.47 million. Okay, I got that right. Then I just need to do 2950 here. I think that was it. Okay, perfect. Perfect. Let me make sure that 2950 is right. Okay, perfect. So that is right now. So there we go. So now our numbers are good. So we're going for 13 cents a share tomorrow, 65 basis point capture, or about 400,000. So just as far as captures go, let's look at those. Earlier in the month, we had a 64, then we had more than one. We had two losses, but then we had more than one. We had almost one. And then we had 0.5%, then 0.5%. I'm just trying to see if it looks like our numbers are coming down towards the end of the month. I mean, maybe a little bit, but it really doesn't. Just a few days ago, we had 1.2. That was after the big dump, though, at the end of the day. 90, I don't know. Anyway, it doesn't really look like they're coming down too much to me, but they obviously are. As it goes up, we're capturing a little less. Vol's coming in. All right, let's go back over to here to these other funds real quick and see how much we were capturing on them. So on the, I can't wait to get a new spreadsheet. On the JEPY, let's get the 5.7 million and 104.98. Let's see, 5.7. million. What was that? 100 and what? Gosh darn it! I'm sorry. 104.98. All right. 10498.000. All righty. So let's drag this down and let's talk about our capture and our cents per share. All right. So there's our you know, only 4 cents a share, that's the lowest one recently on the cents per share basis. Lowest winner. We've lost more on the day we lost, but you know, that's really coming in pretty much. Volatility is definitely shrinking as we get higher up here. Don't worry, here when we get a flush, it'll go back up again. What is this? That can't be right. It's not 2.23%. What in the heck is going on here? I don't think that's what that's telling me. Capture percentage. Well, so 24O divided by R. I must have dropped a, oh yeah, I need an extra zero here. Second time I've done that this month. All right, so capture percentage is 22%. Okay, well, it's a slim pickings, but you will take it, I guess. We don't have any choice. Let's do the triple QYs. Let's go get their fund size. I appreciate you guys letting me talk to you while I do this. You don't know how easier it makes it. You think it takes me a long time to do it now, you ought to see me do it whenever there's no pressure on me. It'll take me hours to do it. You know, it doesn't take hours to do it, but if you include the time I do other stuff. 15,175. 15,175. So let's see what we got here. 15,175,000. Right? Yeah. All right, I got it. And then 275.75. All right, so these guys on the QYs, they're going for 32 basis point capture, and let's look at their other captures. That is the smallest one they've had all month. I mean, not including losers, but I'm saying that if they win, no, they had a really small winner here. That may have been the day that was a weird day. I don't think that's a fair comparison. I don't even want to go back into that day. That was the day that options expired the next morning, and I didn't realize it until Panda and about 4 of my other subscribers told me. Thank God they told me. I appreciate it, but that's the second most embarrassing moment of the month. The embarrassing moment number one was definitely the capture percentage problem on IWMY, or the share dilution problem. All right, so we're going for 32, so that's pretty slim pickings. I'm going to let you guys get out of here. I appreciate you guys for listening. Remember, I don't say it often enough. It's not financial advice. You know, speak to a real financial planner. Like I always say, the internet's a great place to do research. You can get questions to take to a financial planner. You know, if a real financial planner would have told you, if you would have said, hey, I follow this guy named Max on the internet. He says that IWMY is going to pay 100% next month. And maybe a real financial planner would have caught that, would have said, well, I don't think old Max is figuring the share dilution into the equation. He could have saved you some trouble. Who knows? But no, I'm kind of making fun, but seriously, you know, this stuff is serious. Don't listen to anyone you hear on the internet without, you know, double checking it with a professional. CPAs are also really good professionals. I'm a little bit biased because my dad is a CPA, or was a CPA. He's retired now, but he was a CPA that also had his Series 7 license, so he could sell stocks and options and bonds. And you know, a good CPA or a good tax attorney or a good you know, financial planner or a good wealth management planner is worth their weight in gold. All right, guys, it's been fun. I appreciate it. I will talk to you tomorrow. Good night from Jax and Max.